Alright, welcome back everybody. It is Thursday, January 11th, 2024 at precisealgorithmtrading.com. And, well, let's dive into the markets today. So, uh, our automated trading systems. So, these are built on the futures. So, they're leveraged instruments. You can trade them intraday. They're highly liquid and they respond well to volatility. So that's the reason we use them, and they're e-minis, so there's actually micro futures that I have not delved into, but I think we could probably build these systems for much smaller accounts. If anybody was interested in doing that, I could probably look at it. But anyways, these are automated trading systems that literally you turn them on in the morning, you turn them off in the afternoon. They've got hard start and stop times during the day, and they've got parameters that make them buy and sell, along with and the perfect thing is when they buy and sell with the trends, and you get these nice trends that happen here and here. Um, and even this isn't bad. I mean, it's a little choppy, but anyways, this is the Dow, and this is the results of trading. This is not this is not a bar chart for trading or even a line chart for trading. This is the net results, and this is 6 months worth of data. And on the weekends, I expanded out to over 12 months. Or try to. I think last weekend I had troubles, so I just ended up posting the chart and not being able to talk about it live. So, all right, this is today's trading. So you can see a winner and a loser. And the point of these systems is they're built to have stop losses. In fact, this one is one. It's a long stop loss with 1500. These particular ones are built on 3 contracts for the E-mini futures that we're looking at. So everything we're looking at, if you wanted to, you could take this chart and you could divide it by 3 and say, well, I could do a third of that, and each one of these winners and losers through here it would just divide by 3 as well. And these, for what it's worth, these results show after commissions, because you do have to pay commissions for futures. Let's see. This is the Russell, and we're moving up. We don't have a new green dot. A new green dot, when it shows up, will mean that we're at new equity highs. But this has been a good trading so far. I'm still looking at some things to reduce these drawdowns that show up in history. Um, when I get them, I'm going to apply them and just keep moving forward. So here's the results of the Russell. So again, one loser, one winner. And then in this case, the loser was bigger than the winner, but we still do. This thing's built to have more winners that are bigger than losers that are less. So I hope that makes sense. The losers are, I mean, it's all mathematically based. So, and it comes up with an equity curve that looks like this. So that is the goal, from the lower left to the upper right. Obviously, we want to make money. This is the NASDAQ, and it was just killing us for almost 2 months. And now we've popped back up. We're doing a little sideways consolidation. You can see that happens in history. And hopefully we don't get another drawdown at the same time. And we get something more along the lines of this stuff. So today's trading is there. More losers than winners, but obviously the gainers are bigger than the losers. So, which is pretty cool. All right, moving on to Thinkorswim and looking at the actual markets. This is the E-mini futures contract on a daily on the left and an hourly on the right, and I could just flip it over and look at the uh, SPX. But if you notice, the bottom indicator went away, and that's because the SPX is not built with volume. The other instruments, a lot of them have volume in them, and that bottom indicator has volume as a part of it, so it just goes away if it doesn't show. I'm going to flip back to the E-minis, which is going to take a second because the computer has to flip between certain kinds of contracts, and it struggles with a little bit. So here, this is that volume indicator at the bottom down there. This thing can't be taken at 100%. Like, you can't just, well, you could just trade with it, but you're gonna have to trade in and out when you have these flips. But it's more about an overview of bullishness versus bearishness, which is a lot like what we look at when we look at the bullish percent indexes. They're not, certainly not the same tools. They're totally different, but same kind of a concept. I also wanted to come in here and show you we've got really a few indicators going on here at the same time. I'm going to turn off the average true range trail just by going here, and you can see I've got things built in where it says trail type, show trail. I'm just going to say no. So that's going to get rid of the trail for anybody that's really new here looking at this. It gets rid of the trail and just does away. If you see the trails here on the right hand side on the hourly chart, I could turn it off as well. But I want you to see the difference. This is without the trail, this is with the trail. What the trail really does is give me two indicators that I can like kind of look at them together and say, well, are they both in sync? And like over here, if you flip this, I'm going to flip that out to more days just so we can see. We can go back in time here. You can see there's times when it flips back and forth. Well, the uh, 30 period moving average, which is what the green line is over here, flips back and forth as well. But and then really what that is sideways consolidation before a move, which then it popped out to the upside in that case. It could sideways consolidate and then pop down too. But all it's doing is when I put the two indicators together, it's just trying to give me a little bit more clarity of where we're at from a overbought and oversold type of a situation. And I use the stochastics down here for that. But you know, are we up against, this is an average true range where we've been under it, and then when you're going up to break through it, you can see that, and then usually it pulls back after that and you can take off. So, and in the middle of all that, you can see what the 30 period moving average is doing. So, and in this case, like right here on the hourly chart, it's a lot like the daily in it, except this one just flipped recently, and now we're, in my opinion, clearly both. Well, the looks like the ATR trail actually flipped again, but for that period of time right there, which was 2 or 3 days, it was clearly in sync. The ATR trail and the 30 period moving average were both green and moving up. And if both of those are green and moving up, price is actually what's driving that. So that means price is green and going up. Now you can see that we've got the ATR trail flipped, but you can see price is still moving up, and so is the green line. So we're a little out of sync, and the question is going to be, do we find resistance here going into Friday? Of course, Friday being the end of the week, we can get some bearishness, and this could end up being the lower high, and we could go lower from there. And that puts in a lower high on the daily chart, and then we'd go lower from there, put it, and then what you're in is a chop pattern really on the daily chart, but we're really unwinding some of this energy that got built up on the way up. We're rebuilding energy, and then the question is, are we going to break again down or up? And right now I'm still seeing up for most things, and it really is when you put all of the clues together, what your synopsis is. That doesn't make you right. It's just that's your guess, and uh, that's your synopsis. That's what's guiding my trading really. So I'm going to go ahead. Well, I'm going to leave it on the hourly chart and keep it off of the daily and see if that helps some clarity. I do still have the zigzag on here. That's really a tool to see waves in the market, and the little pivots are the yellow dots, and there's pivots to the upside and pivots to the downside. I could color the upside one color and the downside another, but I can see when it's a higher pivot or a lower one. And those are actually showing you, like this pivot right here that I'm pointing at with the little pencil is lower than the previous downside pivot. So we're putting in pivots to the downside, new pivot to higher. So we're looking at higher low, a higher high, a higher low, a higher high, a lower low, and now we're looking to see if we're going to put in a lower high and then keep going down to a new lower low. And for what it's worth, you can count these swings way back in time, and you can see that usually there's one up, two up, three up, four up before we got a reversal. One down, two down, three down before we got a reversal. One up, two up, and that's part of the reason why I'm actually thinking we're still going up, is because usually these things come in three or four, and that was only two swings up, and we didn't really get much of a pullback on even that when it consolidated. So I spent a lot of time on that on purpose, especially for the new people. So here's the Russell, and you can see we've already got a lower low. After we got a high, we got a actually we don't have a technical lower low here. Now I'm looking at it. We do have a lower high because this lower low didn't go below the previous low, unless we want to count this signal, which is really just choppy action right in here. But if we swing down here, we come up here, and then we swing lower, I'm going to count this one up here. That doesn't show up because it's technically, it would be because it's programmed in with certain calculations. That didn't actually happen here, which means that instead of having a low surrounded by two higher bars, we have equal. Probably what's happening is we have equal bars there instead of a lower bar, and that's probably close enough. If we end up getting the zigzag lower, or we're just going to chop around here and go put in new highs at some point going forward for our bullish case. Here's the Dow. We're chopping around in the upper zone. Still looks pretty vulnerable to a pullback, but it's also looking pretty strong because it's hanging out up there. The NQ, which is the NASDAQ, we've already had a push up, a push down, a push up, a push down. The question is going to be, are we going to get a follow through third push up? At this point, it is really not showing its hand, and although if you look over here at the hourly chart, that was the high, and then we had the giant pullback. Now we've been putting in higher highs, higher lows. This does look like a lower low because we came up through all these, pulled back, and that could be a lower high. And if we go down from here, then all we're doing is fulfilling basically some consolidation and a pullback, and possibly putting in that sideways new short-term downtrend, what I expect to remain short-term. The transports, they sure look like they have a lot of unfinished business to the upside. So consolidating, the stochastics is down, so we're in the oversold territory or reversal territory potentially, and we could literally start taking off from here, and it wouldn't be any surprise to the upside. I mean, oil up 1.64% on the day. That's the USO. And then if you look at the futures right now, they're up 1.8285% right now overnight. So hopefully, for those of us that are long in oil, you can see there's the 30-period moving average. And you could say, well, it's not green. No, it's not. But is it falling like it used to be? No, it's starting to level off. In fact, it was leveled off, and then it fell some more, and now it looks to still like it's slowing the falling, and then it'll turn green. But in the meantime, we've been in, since it started to be flattened out over here, risking from this, let's call it 68 level, down to 63 or 8%. And actually, I think I bought into it as it was falling, so I'm only risking somewhere around 5%. And then if this thing takes off, zoom out a little, you know, we can start taking profits all the way up through here, all the way up to 80 and 82, if we start clearing some of these old pivots to the upside. Then here's what the oil contract looks like going into tomorrow, and I usually say don't pay any attention. I still really say it, but boy, that's looking pretty bullish into tomorrow already. So we could start clearing that first pivot even tomorrow. Gold, GLD. It's just more of the same. We're in a series of higher highs and higher lows. This last one could have been an equal high, and we could go on to lower lows. We'll see. I'm not invested in this one right now anyway, but we are also in the lower reversal zone on the stochastics down here. Let's look at BITO just because it's out there. So Bitcoin's been going higher, and now it's chopping around in a higher zone. And let's move on to stockcharts.com and look at the bullish percent indexes, and then get out of here. The industrials didn't move today. The NYA down 0.27%, which isn't much. The transports didn't move today. The NASDAQ down 0.81%. The SPX down or up 1.09%. The OEX flipped over to a new column of O's today, down 1.33%. So very short-term bearish, longer or intermediate-term bullish, and that's where we're at, and that's the measurement that we're looking for right now. And then the NDX, which flipped the other day, down 1.37. So now we've got alignment on the SPX, the OEX, and the NDX to the downside. And as long as it doesn't fall apart, this thing could literally flip to the upside. Get this type of thing can get everybody bearish, and this thing, if it doesn't get crazy to the downside, it could flip bullish. That'd get everybody on the wrong side of the boat, and then this thing could go higher from there, which is how the markets work. So they're counterintuitive, and if they weren't, then everybody'd be doing this. So until next time, take care, good trading, and have a great night.